Hi everyone and welcome to the Inderes TV. Last week we published an extensive report on Harvia, and that's why we're here today to discuss the case further with analyst Rauli Juva. Welcome.
Thank you.
Let's start with a classic. What does Harvia do in a nutshell?
Yeah, Harvia is a sauna and heater producer, pretty much. So traditional heaters and complete sauna cabins, basically.
Pretty straightforward.
Yeah, that's pretty simple. And then of course some accessories around that. And the main markets are Europe and USA. USA is clearly the main market, and then of course they are growing also in outside of those regions.
Yeah. So could you describe this market for these types of products, and how big is it, and where is it? How much, which space does it grow?
Yeah, globally the company, there's for the first thing, there's no exact measure, so there's no like outside consultant or whatever kind of outside market data, but the company estimates that the overall global market around the sauna and spa business is around 3.5 billion euros. But then if we take out Russia from that, where Harvia is not operating, and then also take into account that half of that market is actually installation and maintenance where Harvia is not operating, then the kind of relevant product market for Harvia is around 1.5 billion euros, or was last year roughly. That's rough numbers. And compared to that, Harvia is of course quite large already. They are holding over 10% of that relevant market globally. And the growth. The growth historically has been in the heater side quite not so fast, like a few percent in a year historically if we look back, and the overall sauna market has been growing maybe around 5%, and now Harvia is expecting that for the coming years it would be actually more than that 5%, driven by two things basically. First is that Europe is expected to recover after a couple of weak years, after again very good years in the COVID times, and then also there's clearly a trend of increasing demand and interest towards sauna outside Europe. So those factors, at least by the company, is expected to drive the market growth actually above the 5% now for the next few years.
Yeah. That was actually my next question, but that was a good one. So more than 5% expected growth.
Yeah, that's what the company expects, and we believe that at least to the 5% they should be able to achieve. Now it hasn't been growing in a few years, as there was this big boom during COVID times, and it came down in 2022, and then it's been fairly stable. So US has been growing, and Europe maybe coming more down.
Yeah. So, but Harvia is actually more international than one would think. A network of distribution in 90 countries and production in how many?
Production in I think 9 overall. There are some smaller and some larger, but yeah, at least like Finland, Germany, Romania, US, China are like big production countries.
Yeah. So that's really interesting that it's so large. So which are the most important markets for Harvia?
Well, as I mentioned, as a kind of one single country, the US is clearly the largest. They are not reporting US separately, but the North America, where US is the vast majority, was almost 40%, I think, now in the first half. So the US is something like 1/3 at least, or 35% of the group. So that's really meaningful. And then the other single countries, of course, come far behind that. But then Europe overall is in the same ballpark. And then also Asia is growing. And like I said, from Russia was and is a big sauna market, but from there they pulled out after the attack on Ukraine a few years ago.
Yeah. So US is the single most
US is
important.
clearly the single one most important.
Yeah. So how does Harvia manage this extensive global distribution network across all these countries?
Well, I guess it's just normal like operational excellence in the supply chain, so that they have the heater production is in basically in China and Finland, or the low cost heaters, and then they are shipped to the US, for instance, and other countries, and then in the US they have the steam side production in the US, and they have the sauna cabin production in US. So they have, like in Europe, and also in Europe they have that. So in Europe and US they have much of the production locally, and then the heaters are maybe shipped more around the world, or especially into the US, which is of course important if we think about the tariffs, that most of the production is locally in US. It's only the heaters that come from outside, basically.
Yeah. So what does the ownership structure look like for Harvia?
That's pretty diversified. There's no clear main owners. There's some or many financial, like funds and investment firms. Some are over 5%, but then there is not clear one clear strategic owner, and then there is of course still many of the Harvia family members who held the company a few decades ago, kind of completely are still meaningful owners, but even them together are not like major owners that they could decide anything on the company on themselves. So it's very fragmented.
Very fragmented, yeah. So Harvia is known for its excellent profitability with an EBIT margin of 20% around.
Yes.
What specific strategies does Harvia employ to maintain its superior efficiency?
Yeah, well, I don't know if I know the specific strategies, but maybe the overall themes are of course the long experience on the heater side. They know the product, they know how to make it, they know how to make all the parts there, so they also make a lot of the components themselves, and that gives of course them a kind of bigger chunk of the profitability over the whole value chain. And they have also very big, or not very big, but compared to the competitors at least, they have much larger scale, since they are the leader in the market globally. So just kind of scale efficiencies is of course one, and those are on the production side, and then obviously in the product side they need to take care of the brand attractiveness and kind of constantly also develop the products that they are up to date with the markets, even if in the industry there's not really like big innovations coming out there and that often. So it's not in that sense. It's also easy to maintain the market positions they have.
Okay. So own production and the positioning as well.
Yeah, own production, scale, brand, I would say. Yeah. And just then kind of it feeds itself when they are the biggest company. That if in some countries the interest towards saunas and increase, then of course Harvia is kind of the natural name that would come up, at least among the first ones.
Yeah. So brand awareness is a big thing.
Exactly.
Yeah. So let's talk growth and estimates. The history of growth is really a sight for sore eyes. And it was approximately 20% in 2017 and 2019, but then during the pandemic it was really high. And now it kind of paused in 2022, and we see it trending upwards, but at least in the US it will kind of stall this Q2, sorry.
Yeah.
So what's your view of the whole situation?
Yeah, that has been very much the story now for a few years, that Europe has been coming down after the COVID boom, or now stabilizing, and US and the rest of the world basically have been growing, and now the organic growth in US pretty much stopped in Q2. There was a couple of reasons. One, there was some impact of the comparison numbers and how they were between Q1 and Q2, so a part of a bit of a technical reason, so maybe the underlying market was growing slightly, but there was definitely also a change in the market when the President Trump put out the tariffs just in the beginning of Q2, and that definitely had an impact on the consumer demand. So that hit the market at least for Q2 in a sense that the growth wasn't as strong as before. But we believe that growth will continue in the US, not in the pace that it has been for Harvia now for a few years, where they have been making several tens of percentages of growth every quarter. So we expect like something around 10%, maybe a bit more on average during the next quarters and years. But we believe that growth will continue. And maybe on that subject, it is good to be aware, if you look at the numbers more specifically, is that Q4 last year they did very large campaigns in US, and the sales grew very strongly. That hit margin. Then the margin was quite low. So if we look at the sales numbers, and when we see the sales figures for Q4 in early next year, they might be even negative or very likely to be negative even for the US. But then the profitability should be higher. So the impact on earnings should be much lower. But that's good to keep in mind when you think about the US development, which is obviously very much the key of the story right now. But Q3 we expect that they should return to growth.
Yeah. So what about taking these numbers forward? Modest growth, and how long do you think this will continue? What about 5 years from now?
Yeah, well, we have on our models quite strong growth for quite a few years. So basically, we have close to their 10% target throughout the next decade or so. So around 9% for the next like 9-10 years, or what would we have in our model, like exact forecasting years after that, kind of moderating to like a long-term growth of 3%.
So a lot of positive signs here, but what about risks? Are there any risks that you see in the near future and going forward?
Well, yeah, of course, this US situation is still a risk that how will the consumer demand actually play out there with all the tariffs and kind of every week or month coming new announcement of tariffs, and I think we still haven't seen the full impact on consumer prices there. So the consumer prices will continue to increase going into next year because of these tariffs. So that still might hit more than we expect at the moment, which would obviously be a negative factor if the US growth would be less than we expect. And then overall, it's very much the question that will the kind of interest towards health and sauna and spa products continue to increase outside Europe. In Europe, it's kind of more established, and that's not so much a risk, and there's not so much growth expectations in Europe. But for the rest of the world, if that trend would for some reason kind of stabilize or even kind of fade away to some extent, that would definitely be a major risk for Harvia. But
because that's the whole case.
Yeah, that's pretty much the investment story. So luckily, there's not really signs that would happen, and you would expect maybe that kind of thing wouldn't really happen overnight, but it would start to kind of, and then of course we would like to be kind of mindful when you see that the growth trend would start to decelerate, but no signs really on that. On the contrary, like I said, the company is actually expecting the kind of market growth now to pick up globally after a few weaker years.
Yeah. So what about valuation and recommendation?
Yeah, we turn now with the extensive report to a positive recommendation for the. After a while, I think almost 2 years with the negative rating. So yeah, the share came quite a bit down, as you can see here from the graph after the Q2 report, kind of as a reaction, or at least in my view, as a reaction to the firstly to the quite high valuation to begin with, and then the pause in the growth in the US, so the market got pretty scared of that, and we believe that it's now pretty fairly valued, definitely not cheap. So it's PE 25 for this year, PE 20 for next year, but with strong returns on capital and very good growth outlook they have, I think that's fair, and then the earnings growth of over 10% a year for the coming years is basically the expected return for the investors, which sounds pretty good at this point. So, and that's why we have the accumulate.
Yeah, fairly priced.
Yeah.
Thank you, Rauli, so much for all these comments. And if you want to read the report, we'll put the link down below.